folks, last week was jam-packed with news. We got US labor market numbers and, of course, fresh inflation data too. Then on Friday, the bomb dropped. The Supreme Court ruled Trump's tariffs were illegal. That set off some real whiplash across markets yesterday, Monday, and crypto didn't get a pass either. What opportunities come out of this now, whether Trump still has a shot heading into the midterms, and what that could mean, I'm talking about over the next few minutes with Oliver Michel from Tokentus. Great to have you here, Oliver.
Hey.
Things really blew up on Friday, although we didn't actually feel it until yesterday, Monday. But bottom line, like we've said more than once in these interviews, the Supreme Court has ruled Donald Trump's tariffs illegal. That obviously kicks off a whole chain reaction. And what Trump did next, some might call pretty creative. He rolled out new tariffs right away, first 10%, then 15%, and only for a limited time. It's kind of a mess. How do you make sense of it?
Yeah, we'll get into the tariffs in a second, how he pulled that off, and what this plan B was that he apparently already had in his pocket. But in general, Johanna, it looks like this whole tariff move is for him a really central tool he needs. If he's got the tariff revenue, he can send out stimulus checks. He can also, for example, back the farmers with dollars. He can talk about major tax cuts. He might even be able to pay down debt. So it's a pretty creative lever, and he could use it to really shake up the country's economy. On the one hand, if he doesn't have this tool, then yeah, he's made a ton of promises he can't keep. Then he'll almost certainly lose the midterms, and right now he's on a straight path to losing them. Polymarket even says there's a real chance he loses both houses. So if he doesn't have tariffs and the tariff revenue, then, like Casey Wood said, he turns into a toothless tiger. The midterms, both houses won't be able to back him up like they have so far. And then he ends up a tragic hero, a loser. And honestly, the worst thing that can happen to him is becoming a loser. That's why he's fighting tooth and nail right now. Really creatively, like you said, pulling backup plans out of a drawer. And then you get these surprise moves like Friday, 4 hours after the Supreme Court basically waived the whole thing off. 4 hours later, he already had his answer and immediately drops 10%, then 15%. And of course, the capital markets are skittish and react really badly to uncertainty, to surprises. We saw that yesterday. And what's really bad is that crypto is basically the only thing that trades over the weekend. So on Saturday and Sunday, we're out there getting battered in crypto, while the stock markets can at least wait until Monday, and then it's usually not quite as bad. That sucks, but for Trump, it's the tool, period. If he doesn't have it, he'll lose.
What I'm wondering is, like you just said, 4 hours later, Trump already had, well, a partial fix ready to go, put it out there and said, okay, 10% for now, then 15% later. So basically, he must have already thought through how he'd respond if the Supreme Court struck down the tariffs. But then I'm also asking myself, is the Supreme Court's rulings are supposed to outrank the president's. So why does he let this drag on and think he'll get away with it?
Yeah, because he assumed they'd side with him. He picked most of the Supreme Court justices himself. And he was probably pretty disappointed they ruled against him, basically against their so-called mentor. So I think he expected something totally different. And he's already saying those $2,000 stimulus checks that are supposed to come this summer, he'll do that without Congress signing off. He just does it. And I think once he's out of office, other people are going to have a lot to clean up after him.
It's kind of a deja vu thing when you think about the Fed chair. Trump put Jerome Powell in that job too, and he's not really doing what Trump wants either. And last week, besides the whole tariff mess, we also got economic and labor market data that under more normal circumstances could have shifted the Fed's call on rate cuts. I'd cautiously assume that's not happening right now.
Yeah, everything coming in right now is negative. You've got to say that loud and clear. We talked about the labor data last week, non-farm payrolls. A full year, 2025, where over 1 million jobs got revised after the fact, and at the end of the day, only like 150 to 180,000 new jobs were left. Think about that in a country like the US, 150 to 180,000 new jobs in a whole year. That's pretty scary. And on the one hand, we've got this so-called labor market stability. The job market is weak, it's weak. It's basically just limping along. Unemployment ticked down a tiny bit, but the trend is still intact. Meaning the unemployment rate is still trending higher. And on the other side, we've got price stability, and here you see PCE, which is what the Fed looks at along with CPI. CPI comes from the BLS, the Bureau of Labor Statistics, and PCE comes from the BEA. And here you can see it. December was 2.8. In November it was 2.8, expected was 2.8, and it came in at 2.9. And core is even worse. 2.8 previously, 2.9 expected, and it came in at 3.0. And that means, and that's also backed up by Trueflation. On Trueflation, you can see we were at 0.68 the week before, 0.94 last week. And this week, as of last night, we're at 1.07.
So it's climbing again.
Yeah, so this scale isn't tipping one way or the other, it's tipping down on both sides. The job market is weak, inflation is creeping back up a bit, and what was a really big disappointment last week was, of course, GDP for the fourth quarter. After Q3 with 4.4, we were basically riding the hype train, saying this is it, this is the breakthrough, now we've got it. Then with the shutdown, sure, we dialed it back and said 2.8 would be pretty good. 4.4 we won't hit, but that only 1.4 came out, that's a real letdown, and it's another heavy weight on the labor market stability scale, because the moment it drops, jobs instantly feel less secure. So yeah, what's brewing there isn't pretty.
What's building right now, what's really come to a head, isn't great for Donald Trump either. Like you just said, without tariffs, without that key tool, he can't just push things through and paint himself as the hero of the US the way he planned.
A reformer.
With debt reduction. Yeah, and maybe that ends up making him the guy who tears the US apart.
Yeah, he'll either be the greatest or the worst, so we'll see.
Fact is, just looking at what we know without judging it, Donald Trump always sees the glass as half full, whether he actually succeeded or not.
Whatever he does, it's a win.
Exactly. Last Friday we saw it happen, and we'd been pointing it out again and again. You know when the Supreme Court meets, but you don't really know what they'll decide. Last Friday it was the tariffs Trump had slapped on individual trade partners. Those got ruled illegal, and I'm sure he'd already had people digging through drawers ahead of time for what he could do if that happened. What they pulled out was the 1974 Trade Act, which says you can levy tariffs for a limited time, 150 days, like you said earlier, basically 5 months. He started at 10%, and a short time later he bumped it to 15% across the board.
Everyone and everything.
And that means there are losers and winners. Of course, some trading partners used to face even higher tariffs. I think for us here,
15.
You basically didn't lose or win. But at least for now, it's temporary. Temporary while Donald Trump brings in money for the US. Still, the whole earlier period where illegal tariffs were collected stays on the books as this mountain of debt Donald Trump can't just wipe away.
He pocketed the money, and in theory, it's supposed to be paid back to US companies and consumers. But Steve Besant just stood there all casual and said, let's see how we do that. Because paying back $160, $170 billion isn't exactly easy. So here's the background, Joanna. Trump imposed the tariffs under the IEPA. the International Emergency Economic Power Act, the current ones, the first tariffs, that first big wave, and under that act, he actually needed Congress's approval. He didn't have it, and because it was missing, the Supreme Court said they're not legal since Congress never signed off. Then Trump said, okay, then I'll just impose the tariffs under a different law, the Trade Act of '74. And like you said, for that he doesn't need approval. The catch is, after 150 days they expire. If he gets Congress on board then, he can keep going, but for now they end. And 150 days puts us around late July, give or take, and that's getting pretty close to the midterms. And Republicans and Democrats will be busy fighting each other and doing anything but rubber stamping his tariffs. So still, he's now got 150 days with the 10 and 15%, and they say he'll even pull in more tariff revenue than before on everyone and everything. And that buys him time to rake in cash, basically play the big benefactor for consumers or for businesses, and pump money back into the market directly, like with stimulus checks or tax breaks, to put it bluntly, to go and patch up mistakes.
But the debt load from that earlier, IEPA Act, still stays. Even if he gets Congress to sign off under the '74 Trade Act, that huge pile of debt is still there and it was collected illegally.
Yeah, and then that's just how it is. I mean, the sums we're talking about, the tariffs collected over half a year, maybe 9 months, are nothing next to the debt the US already has. It's like counting the bills in your wallet and then you've got another couple bucks in coins. You just shrug, the bills are what matter, and it's the same here. They're not losing sleep over it. After us, it's all whatever.
In the end, even if in the short term it gets passed on to consumers, like you said, to help with vote chasing, long term it can still blow back on them through taxes, tax hikes and all that.
All those tariffs have already hit consumers because prices went up. So Jerome Powell was right when he said it fuels inflation. And that's been shown too. And that's why Trump went this route and said, okay, if I jack up tariffs and make it a business, and it's not just about bringing in money from tariffs, it's also about using them to pressure foreign companies to produce in the US, build factories there, hire people, basically kickstart the US economy. And that was basically one of the key motivations here. Now he's got the money, and now he's got to see what he does with it. But I'm guessing it'll fizzle out at some point, and consumers will end up paying the price. And that's why he said, so they don't ditch me as voters, I've got to give back part of the tariff revenue with a stimulus check, with tax breaks, so they feel it's not all just on their backs. That's a really central point. And it's no coincidence that this was the first big thing he rolled out, where he stood there and said, I'm going to start with tariffs. We're going to run the US like a business. But like I said, he's getting a ton of pushback, and if it blows up in his face, he'll be the big loser in his second
term.
Yeah.
And last.
And we're trailing along behind with our crypto stuff.
One US company that's basically become a major economic news driver whenever it reports is Nvidia. And tomorrow, Wednesday, the company drops earnings in the evening, I think around 10 p.m. And based on experience, expectations for Nvidia are always sky high. So far, they've always managed to meet them or even beat them. But if this whole setup starts to crack, Nvidia will probably be the first indicator, a big red flag that this nice little party, especially in tech that so much depends on, is headed lower. On Friday, we're also getting economic data, PPI for last January, but I think Nvidia tomorrow night at 10 p.m. Central European time matters a bit more. We'll definitely keep an eye on it and, of course, talk about it in our crypto channel too. Crypto Insights, we'll get to that later, but for now, let's stick with the US indices. because we've already seen, or we'll get to the US indices in a second. First, let's look at the factors that could keep weighing on US indices right now, because recently, yesterday was a bit shaky in the US on Wall Street. And of course, that's not just about tariffs. There's a huge chain reaction behind it, and you can see the storm brewing in some of the big risks you've put together here.
Yeah, we usually have a few warning words over on the right side of the previous slide. And when we were prepping this yesterday, we said, okay, we've just got to make a list now, right? Otherwise, it always sounds like it's just one-off. Here's a problem, and there's another one. But here you can clearly see a whole bunch of issues piling up, and this is basically a checklist of where we stand right now. Because the plan is that the US indexes push to new all-time highs again, one last hurrah until into the peak. And then there have to be reasons. You can't just say they're going to roll over. Why? Just because the reasons are right here on this page. And it's what we've been tracking steadily for 2 years, and it's getting more and more intense. And I just quickly run through them like a checklist. And maybe we can bring it along in the next interviews too. I mean, let it sink in. US government debt and the interest burden are at record highs, bigger than ever. Consumers are hurting too. Debt and interest are at record levels. Just think about credit card debt. We've talked about that in detail. We always talk about the labor market, non-farm payrolls, jobless claims, and a bunch of other factors. And one thing's clear from everything we've seen: the job market is weak. It's not strong. Paul can say whatever he wants, the numbers tell a different story. And it's not just weak, it's seriously wobbling, like we've seen. Inflation is nowhere near 2%. So consumers aren't just in debt, they're also struggling to find a job. And might even need a second one just to get by. Prices are going up, not least because of the tariffs. Borrowing costs for businesses and for consumers stay higher for longer. And we know Paul's line is, yeah, we'll see, we're watching it, we'll kick it down the road. Meanwhile, the Japanese and the Chinese, like we've said again and again, have been dumping US treasuries big time, and that debt has to be funded somehow. So new treasuries have to be sold, and yields have to go up to make them attractive. And here's a huge problem: the tariffs. That's also up in the air right now. Legally, the revenue could fall apart. We know it's basically been pushed out another 5 months. We'll see what happens next. But there's a crazy amount of uncertainty. That's why I said we need the list, because last week we got more numbers on corporate bankruptcies. In the last 3 weeks, we've had 18 major corporate bankruptcies in the US. That's close to a record.
What do you mean by big?
Yeah, I mean a company with a balance sheet above a certain size, then you can call it a big one, a major bankruptcy. Like if some random person says, I'm done now.
In the mom and pop store.
Yeah, I mean, we're talking about really big companies where hundreds of employees are getting let go. And we keep talking about the housing market. It's unaffordable. If a family needs cash and has to sell their house, there's nobody left who can buy it because it's too expensive, not enough money. Interest rates too high. It's all tied together. And another thing we always watch is US truck demand. It's simple. When the economy's humming and goods have to move around the country, that happens by rail and by truck. The moment new truck purchases drop, you know the amount of goods being moved, the stuff that brings in revenue is shrinking. That's a pretty foolproof indicator. Then there's stock concentration. We don't even need to get into that. We've said it enough, it's at record highs. If one of them falls out, like on Wednesday, Nvidia, you already teased them. If they roll over, we've got a problem. And the midterms, that's not looking good for Donald Trump. That means the current administration could lose the majority in both houses, and then they basically can't really govern anymore. That's what hit me yesterday. But to be continued, there are definitely more angles to this. Still, when you look at it, And we're talking about really important things that are, like I said, all intertwined. It's totally clear why the US indexes are going to roll over. Not right away, because they'll obviously try with everything they've got, with cash injections, liquidity, and a bit of support here and there to keep the whole thing alive and give it one more push. But at the end of the day, there'll be a point tied to the economic cycle too, where this whole thing flips, because it can't keep going like this much longer. You can assume that.
Like I said, it's still pretty early. And even if the first move is just a temporary edge case, we're not really factoring in the geopolitical picture yet either, because there are a few flashpoints simmering. Just look at the Iran talks. We'll see.
Ja, da ist so ein War in Iran.
Well, the positioning
Als Ablenkungsmanöver schon.
looks pretty good. For now, because you can see the military build-up there has ramped up a lot, and they're clearly preparing for a possible strike. It's not there yet. And of course, everyone hopes it doesn't get there. Meanwhile, let's look at the US indexes. It just kept running and running until last week. Then Friday hit, and then yesterday, Monday, we saw one big US index after another drop, meaning the S&P, the Nasdaq, and the Dow too. We've seen that pattern before. But that streak just ended, which isn't surprising with these headlines. And yesterday, everything was deep in the red. So is that it? Is this already the rollover, or is it just a bit of a time buffer? And can the US indexes keep performing under these, let's say, pretty critical conditions?
The second one, based on what you just laid out, because the week before last, on that Tuesday, we said the 3 would correct. It'd dip a bit. Yeah, you can see it here. Then it slipped a bit, and it slipped here, and it slipped here too. And we exhaled and said, great, before the final push, you correct again, consolidate again, build a solid floor, and then go higher. So last week, we had nothing but green days across all 3, and I was already thinking, oh man, here we go again, it's about to shoot right back up. But with the US tariffs and the whole Iran situation, you can pretty much assume. And you can see it here on the Dow. You see this red candle on the S&P and on the Nasdaq too. It's still correcting, thankfully. And you can see it really clearly on the Nasdaq here, because that's the one that matters to us, right? I wrote it in here. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. And I also said in last Tuesday's video, I'm assuming this is a really important level. It shouldn't break below, but in this zone, the Nasdaq could catch itself and then push higher. And the same basically applies over here too, even though I watched the Nasdaq the closest, and of course the Russell, since it's moving pretty similarly. So after a positive week last week, the US indexes are thankfully still correcting before, in my view, they make that final move up. And we said the S&P goes to 7,500, maybe 8,000, and the Nasdaq to 27,000, maybe 28,000. Just to put that in perspective compared to the slide before, this is a final push. All the measures, all the support, everything they kicked off is about to hit, bring another wave of euphoria into the market, push the whole thing higher, and then at some point up here, basically kick off the next phase. And the question from last week still stands: how much of a pull can the US indexes create for crypto when they move up? And how much time can they buy crypto for that? Because we're not talking 9 months or a year anymore, we're talking 2, 3, 4 months until this whole thing is over, in my opinion.
At this point, we usually also take a look at the Russell and the DXY, meaning the dollar's strength. The Russell moved right along with the correction.
Yeah, the Russell corrected in the same way. We'll bring it back up if anything unusual comes up, and on the DXY side too. So as the gauge for dollar strength, we did hit our target. Around 96, 97, we were right in there. Now it's bounced a bit. And I brought up the question the week before last, was that it? And now it heads back up, which is definitely possible. Or does it drop again, another leg down? I think for us, for the next 2, 3, 4, 5 months, it's basically irrelevant. But we'll keep an eye on it, and I figure in a week or two, in the interview after next, we'll definitely pull up the DXY again and see which way it's moved.
You already mentioned it. We had the big hit on Friday, and unlike the stock market, coins keep trading through the weekend. But then Monday, when it finally hit Wall Street 2, it pushed everything even lower. We saw Bitcoin had already dropped hard and corrected a lot. So looking ahead, does 60,000 hold, or is it more the scenario you mentioned that we retest the upper 50,000s?
Yeah, right. That's the daily view, like you already said. And this is the bear market, basically how it ended up being defined when it broke below the purple line here, that last higher low. And then it bounced off 60,000, having dropped a total of 52% up to that point. Yeah, and then it made this move back up here above 69, basically above the peak of the last cycle. And that was the moment when we said, that was Tuesday, the week before last, that there are a few scenarios, but the most likely is that it starts this move here. And that's pretty much exactly how it's played out over the last 2 weeks. Yesterday we saw, probably also tied to the tariffs, it dropped again, and we got this crazy high volume candle right here. That matters. It went down, and it's continuing down today. Yeah, and now there are basically 3 possibilities, but for us they're really, aside from the nerves, basically the same. Maybe this is already it now, around 63, or maybe it dips back to 60 and retests it. So either down to this line, down to 60, or maybe, like I described before, they flush the stop losses, wipe out the leverage longs, because most people set up just under 60,000. And it pushes down into the high 50,000s, 55, 56, 57. From 63 down to 55, that's still another 10% plus. But for Bitcoin and for everyone who's been on this ride, I think that's doable. It was pretty clear this compression had been building, like we talked about on the channel. The lows kept getting pushed up and the highs kept getting pushed down, and at some point it has to break. It came from above, and odds are it breaks down, and that's exactly what happened. So what's happening down there right now is basically a bottom forming. One way or another, we're going to print a new low somewhere in this zone. I think a straight drop into the 40s or even 30s from here is pretty unlikely. And the RSI will show the same. So we've got a bottoming process going on in this area. And you can tell just from this, when I said we'd head down again, we're talking about 3 weeks ago now. 2 days after I said it, people in the channel were like, yeah, but we still haven't gone down. And I said, yeah, this stuff takes time. And you can see market's taking that time. And now we're moving lower. Now we'll see where it catches. And then hopefully we get the move back up, a relief rally. And like we've said a bunch of times, it needs to clear 69, clear 73. After that, you've got all the SMAs, the 150, then you get into the retracement area. Plus we still had those open CME gaps. So basically between this area and this area, that would be the target. For the relief rally, and even if I get crucified for saying it, I'll keep saying it. To me, what's happened here has been so abnormal that I still think we're going to get a surprise tied to the relief rally. But based on the RSI, which we'll look at in a second, we'll most likely see a move back up. No matter how far we still dip from here, whether it's 55, 56, or 58, that's my view. I summed it up again on the right, and one more thing. spot Bitcoin ETFs last week weren't especially good, but they weren't especially bad either. We saw about a $300 million outflow. So for how everything looks so negative, not that much is actually happening.
Let's look at Bitcoin again on the weekly chart. You just said we're in a bear market. The big question is, or at least what I heard, is that the worst of it with that 52, 53% correction is behind us. How low can it still go? You just mentioned the high 50,000s, but is the worst over now?
Well, I don't know either.
What are you expecting?
Like I said, this cycle is different this time. We'll get to that in a bit when we talk about altcoins. This top up here, yeah, pretty uneventful. Then we dropped with the bear flag and that second leg down, similar to what we had here. Yeah, so we broke through 50, broke the bear flag, pushed through that low there, and tapped the 200. We had that up there too. So in that sense, it's similar to the down channel from the last cycle, 3 years up, 1 year down. That was the bear market after the 21 peak. We've got a similar setup up here at the top, so structurally, it's comparable, but the move up wasn't, so it was pretty hard to spot. You only really saw it once the high, that dotted purple line, got broken. Then it was clear, by our rule, we're in a bear market. Just a couple numbers. The drop from here down to here back then was 78%. Right now, at 60,000, we're down 52%. So there's still some room, meaning if you applied that 78% here, you'd land somewhere around 30,000. So, yeah, totally different numbers. That's one thing. Second, if you look at the analogy to back then, if you take this candle here, that red one, together with the candle that opens at 60, we saw the same thing. It dropped first, before it went back up. And that was basically the bottom in the bear market, before it moved back into a bull market. From this peak down to the bottom was 10%, just 10%, and that's basically the same 10% we'd have if we go to 57, 58,000 US dollars. That sideways move took 4 months. So in that sense, as unusual as the top was, the bottom might be just as unusual too. But still, I'm sticking with it. How far into this bear market are we? Like we just said, maybe already pretty far. When does the bounce kick in? What's really unusual, and we keep seeing it, is the RSI. The RSI we're at right now, 2552, is even lower than the RSI. At the bottom of the last bear market, that means we're pushing into new territory here. And there pretty much has to be a bounce. And that bounce will obviously tie in with when the macro stuff hits, liquidity, DX2, the gold and silver rotation, and what we just talked about. And of course, if there's euphoria in the US indexes as they run into their peak, then we get another real push higher, and investors will want to jump into crypto too. I can totally see that. This third factor, together with the RSI, is what triggers that bounce. I wrote down that it should take us back into the zones we described on the daily chart. And personally, I'm not done with this story yet, but that's just my opinion. I'm expecting, we'll be surprised, that it won't just be a relief rally, but maybe carries a bit further.
On your...
Only with some probability though.
We'll get back to your personal take in a second. But first, let's take a closer look at the altcoins, because if Bitcoin drops, Ethereum and XRP obviously can't go up. How rough has it been so far? ETH broke below the $2,000 level, and it's still stuck under it.
Yeah, you're seeing the exact same move as with Bitcoin. It drops, bear flag down, boom, done. It's basically the same. What's not comparable and what still keeps me scratching my head is how Bitcoin's and Ethereum cycles are supposed to line up. We always talk about this 4-year cycle. And ETH's all-time high was on 11/10/2021. That's basically the one we always reference, the last cycle's ATH. And Bitcoin hit its ATH almost at the same time. Then everything dropped, and that's the zero we always mark, that point. And that's what we've been tracking from 2021 until now, when we say ETH printed a new all-time high on 8/24, just barely, like by a hair. Meanwhile, Bitcoin's ATH, which we're treating as the top this cycle, on 10/6 at 126, didn't happen until months later. How does that make sense? And also, Bitcoin is clearly above its last ATH and into extension territory, but Ethereum isn't in any extension at all. It basically just got back to where it peaked in 2021 and then it rolled over again. So where the hell was the altcoin rally? We're calling this a bull market. Everything's going up, but we're not getting what we had in all the previous cycles, a real altcoin rally where alts outperform Bitcoin. So that brings up the provocative question, is the cycle we're talking about already at the top of a cycle? If we take Bitcoin right now, the peak of a cycle. So is this cycle really already over, and are we heading down into a bear market now, or as part of topping out, do we maybe see a bit more than what we've seen so far? But yeah, Johanna, that's the deal. We're battling around 2000 and 2000. Is basically 1800 right now, and if that doesn't hold, meaning if Bitcoin corrects down to 55, 56, 57, 58,000, then we'll definitely be testing 1500 here too. But then it is what it is.
Oliver, with Ethereum, we looked at the weekly chart, but with XRP, you chose the monthly chart. Why?
Yeah, the weekly chart on Ethereum showed how the last cycle ended and how the current cycle is playing out for an altcoin, pretty much like you'd normally expect. With XRP, I went one step further and switched to the monthly chart. That way you can look back 2 cycles. That's basically the top. Here, 2018, and here you can see the altcoin move, altcoin season, the altcoin rally up into the top before it then dropped down to the bottom. And that's what I always refer to as the 1 and the 0 when it comes to the retracements we're seeing here. And yeah, then we had the next bull market. And here you can see it really well too, this green candle, that first strong green candle. Similar to here, that's where it all started, and then everything basically moved up into the 2021 high. And this big red candle, that was the month the SEC sued XRP, or rather Ripple, saying you're a security, this isn't working the way you think it is. That basically meant this nice green candle didn't get confirmed and continued like it did here. It got erased before XRP still managed to pull itself together and pulling off an alt season of its own. I mean, if we hadn't had that red candle, we'd have landed somewhere totally different, and you would have seen a similar move like you see here. If you look at this now, we're back at the bottom of the bear market and it's heading up. Let's just remove this big candle. While you can see these 2 moves in the other altcoins too, this was a coin-specific candle in connection with the lawsuit ending and all the clarity that came with it. But if you look at this, where exactly is the alt season here? Where in all of this, where is there a bull market with a massive push up? Like here, for example, or here you see this insane candle before it really rips into the top Where is that here? And yeah, in the last 2 cycles, there was an altcoin season with massive green candles before the whole thing topped out. And that's still what I'm expecting. If Bitcoin goes into a relief rally, which I'm assuming based on the RSI and all the other factors around it, and maybe even pushes a bit further, then I strongly believe our altcoins will really step on the gas again, just like in previous cycles. So like I said last week, I hold very little Bitcoin. I'm basically only in altcoins. And if Bitcoin does go into a relief rally, the altcoins should outperform Bitcoin by a lot. That's what I'm betting on now. And honestly, then I don't care whether Bitcoin prints another all-time high or not. As long as XRP or ETH or Solana or whatever, the top 10 put up their own gains, hit new all-time highs, and maybe even push a little past that.
But why do you think this wasn't a bull market, not a real one?
Because all the other altcoins didn't move with it.
All right, we're skipping the roadmap today, to the great disappointment of our cameraman Stefan Schwenk. But honestly, nothing's changed, and putting the tariffs in there would have been total nonsense. Let's just talk about your positioning. There's not exactly rare criticism like it used to be, all this is the way, this is the way. Of course, you have to adapt to the situation and also talk about the options that are out there, meaning you look at both sides of the coin and get a fact-based picture. You or we always show the possible paths up and down in different ways. But it's also about which path you choose and positioning yourself accordingly, and you're letting us in on that right now.
Yeah, exactly, Joanne. What we've got here is level 1, the first level of info. We lay out the different scenarios, positive, negative, what the indicators are, how strong they are, and what to make of them. And from there, everyone has to make their own call. Stay in, get out, buy later, that's on them. That's not something I can do for them. But I'm not going to twist myself into a pretzel and give in to all the comments saying, come on, just admit we're in a bear market already. I've got my opinion, and that's just my personal take I'm sharing here. What anyone does with that is up to them. And my personal view is this. This is what I think will happen. The US indexes, Bitcoin and altcoins will all pull back. We just talked about the US indexes doing another 1, 2, 3, 4, 5 type correction, like with the NASDAQ, maybe dipping again, Bitcoin possibly dropping into the high 50s, and altcoins moving with Bitcoin. One more small pullback before the US indexes hit their final all-time highs, like I described. That final push, Bitcoin maybe goes into a relief rally, and along with Bitcoin, the altcoins go into an altcoin rally and make up a lot of ground. So after the correction, all 3 move up, and then, for the reasons we mentioned earlier, that move will end. But I'm assuming right here, especially for altcoins, you can definitely expect a solid move up, which makes a portfolio or 2 look a bit more positive. Again, that's basically how I'm thinking. That's what I expect. But like I said, it can also play out differently. What does that mean for me? For me personally, I've got my portfolio, I've had it for a long time, for many years, and it's all tax-free. I'm also mostly up, so that's my personal starting point, and based on that, I'm holding my crypto. I'm not spending a second thinking about selling right now, because I generally think this moment is the worst time to sell. Sure, it might dip back to 60, maybe 58, but with Bitcoin, 10% is nothing. So I'm holding here because I'm assuming we'll still push higher in this zone, and I might get the chance not just to hodl, but to hodl smarter and maybe sell a thing or two. Right now I'm buying maybe some altcoins. I'm not buying more Bitcoin. Bitcoin isn't really my thing. For us, Bitcoin is the leading indicator for the whole crypto market, no question. That's why we go over Bitcoin in detail. But I'm not a Bitcoin investor. I invest in altcoins and I might add more altcoins. Not now, and not even if it drops further, but once Bitcoin's relief rally is confirmed, meaning the moment I say, yeah, Bitcoin's moving up, the odds it's heading into a relief rally go up, and then altcoins should outperform, like I said, because we haven't had an altcoin rally this whole cycle. And maybe we don't get the altcoin rally together with Bitcoin topping out, but instead we get the altcoin rally tied to a relief rally, just a Bitcoin relief rally. If that plays out, I'll definitely add 1 or 2 altcoins again, but still with the goal that when we get to the end of this move, I hopefully nail it better than last time. And sell. That's my personal plan. Some people say, I've got so much cash, it doesn't matter, I'm doing DCA, I'm buying now because prices are fine. Yeah, nothing wrong with that. In 5 years, when we look back at Bitcoin at 63 grand, some folks will say, damn, why didn't I buy back then? I had the chance. And others will say, I'm drowning, I gotta sell now. But those are pretty subjective factors that don't really apply to me right now. That's just how I do it. And to be super clear, I'm still wearing the bullish glasses. I do believe in this whole story, and I think overall it's going to be really positive. And like I said, make portfolios look pretty damn good again. And that's a pretty solid basis to think about whether you get out. Probably because this ending here, compared to what we said up front on slide 3 with the checklist, what's going on in the US, which is the key market for us when we think crypto, what's all going wrong there? How far down are they going to fall? And is it really worth it to keep the coins? So it's basically optimized hodling. We'll see. That's pretty much my personal subjective plan. I'm not broken yet.
So like you said, everyone's in a different situation and has to decide how much cash they've got left, how much they can still invest, or if they'll need it soon. Are you tax-free? That's all stuff everyone has to figure out for themselves, and you're letting us in on your plan. Still not financial advice. But of course, thanks a ton for all the info today. And I'm really curious how this plays out. All right, everyone, that's it from us for now. Hope you make the good, right calls for yourself and that you'll be back with us next Tuesday.